Hello, Carrie Cross with the Cross Group at Intero Real Estate. We're going to try this again because we've had some technical difficulties. So my friend Jason, go ahead and introduce yourself.
Jason Peterson, branch manager with Guild Mortgage. How you doing?
And Haley, like I just said, Haley is outside the office because we had a massive spill.
Yeah, 32 ounces of coffee all over my wallet and phone.
Wallet, phone, paperwork, desk, floor, everywhere. So we kicked her out. She's next door. She'll pop in and out. So you're with Guild Mortgage.
Yes, I am.
Let's tell them a little bit about the company.
Well, Guild Mortgage has been around for over 50 years. The founder of Guild Mortgage was a builder, and he wanted, he got sick of working with all the banks and mortgage lenders at the time, and he said, I was going to create my own company to help people buy my houses I'm building, and that was the basic premise for starting the company. It's what we still believe in today. And a few years back, when the current management took over the company and invested and bought him out, the women who did that, because we are a woman-run company actually. The top executives are women. Mary McGarry and Terry Schmidt, our CEO and CFO, and they're doing a great job promoting home ownership. That's the whole reason Guild is around, and that's our main value, is to take people who want to buy houses and get them into homes. We've got tons of down payment assistance products that we use. And we work, with FHA loans, Fannie Mae loans, Freddie Mac loans, VA loans, whatever it takes to help somebody get into a home. That's our goal. And if it takes, 1 month, 2 months, 6 months, a year to help somebody get qualified to actually get them into that house, we stand beside them the whole way to make sure that they can, achieve the dream. And that's our focus of our company, is to make sure that people can buy houses.
I love it.
Thank you.
Well, and I love the company. I love the people that work there. I use a lot of your agents that do a fabulous job. But the real reason, to be honest, is the programs. Yeah. I love the programs.
Thank you.
They help a lot of my clients that don't think they're ready to buy, or need a certain something because of what they have going on in their situation. But many of Guild's programs are just over and beyond other companies that I find out there. So do you want to talk a little bit about a couple of the programs that you have?
We've got a new loan program coming out. It was just, press release just went out today. I'm not going to get into too much detail, but a 1% down payment program. The Guild, it's proprietary to Guild. It's a great product. We're very proficient, and we do a ton of Cal HFA loans. Both the conventional and the FHA for Cal HFA financing. That offers somebody to get into a house with very little down payment. Very, very little down payment. We're still doing the Golden State Financial Platinum loan, which gives somebody a 5% grant to buy a home. Right. That helps them out with their down payment and a small portion of their closing cost. Those are the biggies. Those are the ones that most people use. If they got a down payment, we still have probably one of the best FHA loans in the market. Phenomenal rates, flexible guidelines. I've really been promoting to your agents and to a lot of people is looking at the high loan to value conventional loans, home ready, home possibles. That lets somebody buy a house with 3% down. It's a conventional loan, and you can actually buy out the mortgage insurance. And if someone's got really good credit, but it's their first home and they don't want to spend all their money on you can buy out with putting a big down payment. You put a smaller down payment, get your house. We can buy out the MI, keep that payment low, and make it an affordable first home, because they're probably gonna have some work to be done on it.
Right. That's great.
And it's perfect for this area we live in, because being in East Contra Costa County, we get to utilize pretty much every down payment assistance program that there's available, because our loan limits out here, you can still buy a house with it.
Right.
And something that most people don't know is a lot of down payment assistance caps you at $424,000. You got to have a $424,000 loan or lower.
Okay.
Well, Cal HFA will allow us to go to $600,000.
Oh wow. So
we can go up higher on those Cal HFA loans. So if somebody wants to buy a $450,000, $500,000 house, we can still use Cal HFA.
Okay.
And a lot of people, they don't know that. So what I always tell people is you don't call us for a rate, you don't call us for a single program, call us for an appointment.
Right.
Sit down, find out what's going to be best for you as a consumer to buy one of Carrie's homes.
Yeah. Well, and one of the things that actually we were talking about earlier is that you had said that a lot of people come in and they say, I want the conventional loan, and then they realize the FHA is actually a better loan for them because of whatever reason. So, so one of the things that a lot of my clients, now that we're doing the millennials and things like that, we've got some student loan debt out there. So What can we do for those kind of people?
Well, and this is where coming in and talking to us is important, because each different loan product looks at student loans differently. FHA is very conservative when it comes to student loans and how they calculate that against your debt to income ratio.
Okay.
And VA is the most liberal. And Fannie Mae just recently came out at the end of April, beginning of May, and they're looking at student loans way more liberally than they used to. Now they'll allow us to look at somebody's interest-based repayment and potentially consider that for the debt to income ratio, as where historically up to this point we were having to look at the fully amortized payment. And if you have somebody who's got $100,000-$200,000 student loans, I mean, it's just cost prohibitive at that point for them to buy a house.
Right.
But
Well, that's great news.
it's phenomenal news, because now somebody can come in with one of our 3% down conventional programs and qualify a little easier than they did just 2 months ago.
So if you have student loan debt and we've already told you that maybe you didn't qualify, it's maybe you want to double check that and see how you're looking now. So that's really good to know.
Yeah.
Maybe you could touch a little bit on conventional versus FHA, because that's a big thing that a lot of people say, I have money, I don't need to do FHA.
So if somebody comes in and talks to us, and we're trying to decide whether FHA or conventional is the difference. One is, someone who's going to get an FHA loan is someone who's potentially had some credit issues in the past.
Okay.
4 or 5 years, and we have to go to FHA because as long as they've been clean for the last 3 years for closures, short sales, BKs, they can still get a loan.
Okay.
Conventional is going to be a little stricter on that. 7 years out of foreclosure. Short sales. It's going to be like 4 or 5 years.
Right.
BKs, all that stuff. But if they're coming in, they don't have a lot of that old baggage. It's based on credit score. So if they've got really high credit, I'm going to try to send them over to a conventional high loan to value. But if they've got average credit, we're going to go FHA. And the reason being is FHA MI, mortgage insurance, which is you have to have on your loan if you over 20%. If you only have over 80% loan to value.
Right.
FHA MI is pretty cheap. It's 0.85 for 95% or above, and 0.80 for below.
Okay.
Whereas conventional MI, if you've got really low credit, could be 90%, 100%, 125%. So it can start getting quite expensive.
Okay.
But if someone's got like I said, over 720 credit score, we are going to try to steer that person into a conventional loan.
Okay.
And I hate to use the word steer because that's illegal, but
Right.
when it gets down to it, we're going to show them all the different options,
Yeah.
and we're going to lay out, a conventional loan, you can be better. Also, if you've got somebody who fits within the income limits, Home Ready offers cheaper mortgage insurance.
Oh.
And that's a product that I'm a huge fan of, because when you can get somebody into a home with 3% down, conventional, cheaper MI, and there's two ways to look at MI. On an FHA loan, you've got your upfront 1.75. You have to pay that.
Okay.
It's financed into the loan, 100% of the time, and then you pay monthly. Conventional, there's no upfront,
Right.
and you can either pay it monthly or you can pay it upfront and buy it out.
Oh, okay.
So the cool thing about that is if you go in 3% down on a conventional loan and you buy out your mortgage insurance, you're done. You never have to do anything with that loan again. You don't have mortgage insurance. It's gone.
Okay.
Also makes you qualify for a higher price point because you don't have as much monthly expense.
Right. That makes sense.
So
That's great tips.
and mortgage insurance can be bought out through it's a closing cost. So if you have somebody who ends up getting a credit for closing cost from a buyer, seller, lender, that can go towards paying out the closing costs.
Okay. Fabulous. So now we touched on PMI. So I've got some people on here that have been in their home for many years. They're not looking to buy, but maybe we can help them decide what they need to do to get their PMI off, or if that's an option and how that works.
Well, if they have a conventional loan, the first place to start is if they've been there for a couple of years, is call the servicer, call whoever they're making a payment to, and just ask them, hey, values are up in my area. What steps is it going to take for me to get rid of my PMI?
Right.
And if they're a good company like Guild, we service a ton of our loans. We that's one thing I love, because people come back to us, year on year, and we actually will reach out to them if they can better themselves.
They've done that to many of my clients.
And so they could start with the servicer. If the servicer's not being much help, then you go to somebody like us, and we can either ask them, we can show them, hey, if you refinance, rates are lower right now. We're back to where we were at before, or at or before the election, which is great. Show them if you refinance, here's how you can get rid of the MI. And we even have people who come to us and they think they're at an 80% loan to value where they would have to be able to limit their MI, but they're really like an 85. So what we show them is, okay, if you did something now, here's how you could buy out your MI.
Okay.
Because the way MI is priced out on a conventional loan, the lower your loan to value, the cheaper your MI.
Okay.
So if you have a 15% ownership in your home, which would be an 85% loan to value, your mortgage insurance should be about half of what it would be if it was a 95 or a 90% loan to value. So what we are finding, especially in this area, because values have been going up so much, we have a lot of people who, they bought the home with 3%,
right,
and now they've got 15% equity.
Yeah.
They've got great credit, they've got great jobs, and we're able to help them buy out the MI.
Okay.
And MI ain't cheap.
Perfect. Awesome. So we touched a little bit on down payment assistance programs. Did we talk about that? Is there more?
Well, down payment assistance programs. There's so much out there, and there's so much. I hate to use the word fake news, but there's so much communication to down payment assistance and what programs are not available. My big alert or my big beg to everybody out there is, like I said, don't call for a rate, call for an appointment, because what you really want to know is what programs can be the most advantageous for yourself. A lot of down payment assistance is money you're borrowing, and that money, that loan is going to be a lien on your property until you sell or refinance that property. And I mean, we're talking 10, 15, 20 years down the line, it's still there, collecting simple interest. And then there's grants, which after you buy the home, it's a grant. The money was given to you. It's like a scholarship to buy the house. I mean,
which is insane.
It's awesome. Here's free money. Take it.
I keep telling all my clients, you have to just call and see if you qualify for these. I mean, it's amazing.
And that's the key. So what we try to do with down payment assistance is we try to show them, all right, if you go the grant route, this is how much money you're going to have to come in with.
Right.
If you don't have that much money, here's where you're going to have to go if you're going to have to borrow the money. Right. I mean, owning a home is not free. Right. You got to make a monthly payment. You're going to have an initial investment. I mean, if it was free, everyone would own one. You're going to have to work for it. Anything worth achieving is worth working for and earning.
One of your programs gives a tax credit.
Yeah, that's the MCC, and that's something that you need to get a CP on. CPA would be a fantastic guest. A couple weeks, she needs CPA because they can talk about what the MCC tax credit how it helps people. But yes, MCC is fantastic because it helps people
pull out monthly.
Well, they have
more money monthly, so that they get the tax break at the end.
Exactly. And that's where you have a CPA on here to talk more about it, because I'm going to get in trouble and I'm gone. And then I'll be here like,
we don't want you to be gone. So let's do that. Let's not talk about it. We'll keep them wanting more. You guys will talk to us about that later. Okay, so.
But that's a phenomenal talk, because the MCC is awesome. I like MCC a lot because you're correct. And for your millennials or your younger borrowers who are going to be in a house for a long time, and I love MCC.
Well, I didn't know about it. One of my buyers got that program. When I went for the signing, they were explaining it to them, and I was just amazed because, it gives them that extra monthly money that they can pay their PG&E and all those things that now they weren't ready for, but they have that write-off at the back end. So it was just above the home ownership write-off that they already have. So we'll have a CPA on here. We'll talk more about that. But yeah, there's definitely the tax benefit is
it's
great
awesome
as well. But so you keep saying make an appointment, not ask for the interest rates, because I get asked the interest rates all the time, and I always tell them that's not my specialty. Here's my lender's number. Give them a call. So so with that, the biggest hurdle I get is, I don't want to spend all that time. I don't think I qualify. So is the process that horrible? Like, should people just fill it out? Because I feel like, if they're not ready now, then we can let them know what they need to be ready, and they're going to have to get that paperwork eventually. And what is the process if they're going to be ready to do that?
Getting a loan, I think it's easy because I'm in the industry.
Right.
I know people are going to be like, oh my gosh, it's like do my taxes. It's so hard.
I keep telling all my clients, you have to just call and see if you qualify for these. I mean, it's amazing.
And that's the key. So what we try to do with down payment assistance is we try to show them, all right, if you go the grant route, this is how much money you're going to have to come in with.
Right.
If you don't have that much money, here's where you're going to have to go if you're going to have to borrow the money. Right. I mean, owning a home is not free. Right. You got to make a monthly payment. You're going to have an initial investment. I mean, if it was free, everyone would own one. You're going to have to work for it. Anything worth achieving is worth working for and earning.
One of your programs gives a tax credit.
Yeah, that's the MCC, and that's something that you need to get a CPA on. CPA would be a fantastic guest.
Oh.
A couple weeks,
we'll get a CPA
she
on
needs
here.
CPA because they can talk about
Okay.
with the MCC tax credit how it helps people. But yes,
Yeah.
MCC is fantastic because
idea.
it helps people.
Pull out monthly.
Well, they have
more money monthly, so that they get the tax break at the end.
Exactly. And that's where you have a CPA on here to talk more about it because I'm going to get in trouble and I'm gone. And then I'll be here like
we don't want you to be gone. So
exactly.
Let's do that. Let's not talk about it. We'll keep them wanting more. You guys will talk to us about that later. Okay, so
but that's a phenomenal talk because the MCC is awesome. I like MCC a lot because you're correct. And for your millennials or your younger borrowers who are going to be in a house for a long time, and I love MCC.
Well, I didn't know about it. One of my buyers got that program. When I went for the signing, they were explaining it to them, and I was just amazed because it gives them that extra monthly money that they can pay their PG&E and all those things that now they weren't ready for, but they have that write-off at the back end. So it was just above the home ownership write-off that they already have. So we'll have a CPA on here and we'll talk more about that. But yeah, there's definitely the tax benefit is
it's
great
awesome
as well. But so you keep saying make an appointment, not ask for the interest rates, because I get asked the interest rates all the time, and I always tell them that's not my specialty. Here's my lender's number. Give them a call. So so with that, the biggest hurdle I get is, well, I don't want to spend all that time. I don't think I qualify. So is the process that horrible? Like, should people just fill it out? Because I feel like, if they're not ready now, then we can let them know what they need to be ready, and they're going to have to give that paperwork eventually. And what is the process if they're going to be ready to do that?
Getting a loan, I think it's easy because I'm in the industry.
Right.
I know people are going to be like, oh my gosh, it's like do my taxes. It's so hard. Getting a loan with Guild Mortgage, the pre-qualification process actually is not that hard. We have a phenomenal online platform called My Mortgage. It's not even an online old school application. It's a questionnaire form, so it's intelligent, where it asks you questions, and then as you answer the questions, it asks you more, and it helps you complete your loan application without it just being a form that you're sitting there typing and trying to figure everything out. It'll say how long you've been on your job. 2 years. Goes on to the next thing. Do you have a bank account? Yes. It doesn't make you try to think too much. Then when it's done, it'll actually send you a task list, and it'll say, please gather these items: a pay stub, W-2s, bank statements, and then you upload it to that portfolio, to that they call it your profile, your My Mortgage profile, and it's a secure platform to upload your documents, and that transmits it all to us. So once you've done that, then we can go in there, pull your credit, review your documentation, find out if you pre-qualify or not. We may come back to you and say, you're close, but we might need a couple more other documents. But the cool thing about that is you can do that at your house at 2 a.m, watching infomercials, and to at least get the ball rolling. And that's what I think everyone should do, is if you're thinking about buying a house, get on our websites, go in there, do the application, the My Mortgage profile, and find out if where you're at. Because it's almost never a no. It's either yes or a not now.
Right.
That's the key. Not now.
Right.
We have had tons and tons of customers who come in and say, I don't think I can buy right now. We're like, what? You're right. You can't buy right now. But in 6 months, you can buy.
Right.
And that it's awesome because they can start saving. They can start planning. It's like, I have 4 children. People always ask me, did you plan on having 4 kids? I said, I didn't plan on having 1. So the next thing you know, I had 4.
Right.
That's kind of how loans are. A lot of people decide, hey, I want to go. They drive by a house and go, man, I love that house. I want to buy it. But they haven't planned to own it.
Right.
So when you get pre-qualified, sometimes hearing not now is better.
And sometimes when they get pre-qualified, like the student debt thing, I'm assuming my phone will start ringing from some of my clients that have filled out those apps with you guys, and they couldn't do it because of the student debt thing. And then the lender calls me and says, hey, this new program just came out. I think we should call some of those old people X, Y, and Z. So when a program comes out that now they do qualify for, they have their information in the system, and it's easy to pull them up.
Exactly.
So that's another reason too. You want to take advantage of those programs when they do come available.
Exactly.
Absolutely.
And with rates going up and down, if we see a huge dip in rates, someone who actually who may have qualified for not what they wanted to, now with a huge dip in rates, now they do qualify for a little bit more. Right. The other thing I am going to caution you about is if you're excited about buying a house now and you're qualified, do it. because I can't tell you how many times somebody has actually shopped themselves out of a loan.
Yes.
There was a lot of people in October wanted to buy a house, and after November 8th,
Right.
they didn't qualify anymore.
Right.
Rates went up so much that they didn't qualify anymore.
Haley and I have been doing a big push that, you know, when rates go up, you can't afford what you think you could afford now. And so we know that that's going to happen eventually.
Exactly.
And so that's something that we want to definitely plan in advance for. So,
Yeah.
Okay, so our Facebook Live is not working, so we're not interacting with people. These were questions that we had gotten earlier on.
Mm-hmm.
So there may be some questions later on, so we can readdress those if they come up and we can answer them. So definitely leave questions and comments. And then contact me if you have any more questions, and I will get you in touch with a guild representative, and we will get things going there. Any other questions, things that you want to talk about? I think we're good.
You know, I just want to reiterate, you know, get on our website, get your app going, get an appointment with us so we can tell you about our products. And, you know, if someone tells you you don't qualify, if you've been at other lenders and they say, you know, you don't qualify, you're never buying a house, give us a call.
Absolutely.
You know, give us a call, and we'll let you know, hey, you know, we know it's not now, but, you know, do these things, or at least start these steps, and then you'll be fine. You know, and it might be as simple as, you know, pay your bills.
Right.
Save some money.
Or pay pay this bill off, not this bill. Because sometimes that's great advice too.
Yeah, and you know, I know that there's a lot of people out there who aren't on a credit monitoring site.
Right.
A lot of times we pull someone's credit for the first time they've ever had their credit pulled.
Absolutely.
And they're like, holy cow, I didn't know I had all this stuff. I'm like, well, me neither. So we talked to them about it. You know, they're like, what'd you do? You pulled my, you know. You know, so we talked them through that, and that's where a lot of not now stuff comes up. You know, they're like, well, I guess it looks like I had my identity stolen.
Right.
I got to do something about this.
Absolutely, that's huge.
Yeah.
Well, and I do have to. I want to reiterate that if you've been to other lenders and you didn't qualify, I do recommend. Like I said, the reason why I use Guild, one of the reasons, I know I love all of their agents and everything, but one of the reasons is their great programs. And some people, many people, have said, "Oh, I didn't qualify," and I say, "Look, let them take a look at it and." There's a program for them. So that happens all the time. So definitely.
And I do want to come back because when I get the details about the program that just came out today for the Guild Open House, I want to come back and give you guys the details on it, because if it's as amazing as I think it is, I think we're going to be doing a lot of it, and I think we're going to have a lot of happy homeowners because of it.
Nice. Well, that's good news. That's exciting. All right. Well, next week it's going to be exciting because we have Ed Younger, an attorney.
He's an exciting guy.
He is. He's going to be super fun. And he's going to talk estate planning, trusts, all that good stuff. So it doesn't matter if you own a home, if you don't own a home.
Contact Carrie Cross at 925-584-1640 or visit our website at www.crossgrouphomes.com.